For investors, of course, we never want to have a crisis, but at the end of the day, a crisis also brings you opportunities. And that is definitely what we see in the current market environment. And it's not, let's say, the customer call among our, let's say, investors or the market commentators out there, but we see a lot of interesting value coming out of Europe today. It's not the case that the whole of Europe is very attractively priced, but certain segments of Europe is very attractively priced. And how we have been going about looking upon this is that, of course, we're not blind to the fact that there is a crisis going on. There is such a thing as liquidity issues for the governments, and there are surely some liquidity issues for the financial sector. And there might be write-downs of government debt, etc., etc. For us, the question is always what kind of discount is justified and what kind of discount in the market is not justified. And when we, to make a concrete example, favorite example, the Spanish stock market, which I personally believe is very much misunderstood. It is a market where more than, if you look at the stock market, you need to differentiate it to the Spanish economy. Because there's not an equal sign between the Spanish economy and the Spanish stock market. And I would be the first person to agree that the Spanish economy, they are in trouble. And they have big structural issues, and they're going to have to try and solve them over the next 10 years or even more years. It's going to be a trouble. However, let's look at some interesting facts from the Spanish stock market. First, for instance, 70% of the revenues of the Spanish stock market is generated abroad. Look at some of the banks, for instance, because there have been a lot of focus on the Spanish banks lately. We saw the bailout last week of up to 100 billion that was made available to Spanish banks. Which Spanish banks need this 100 billion? Is it the listed banks, the big banks? No. If you take the banks Santander and BBVA, which makes out, if you look at the banking sector in Spain, which makes, on a market cap basis, they make out roughly 95% of the Spanish banking index. They don't need any help. Take Santander, been voted the best European bank, I think, 3 years in a row. They're much more dependent on what's happening in South America. Biggest market, 25% of revenues being generated in Brazil, 9% being generated in Spain. Doesn't mean that they don't have trouble at home, but it doesn't mean that it is a Spanish bank that is only dependent on the Spanish economy, like the savings banks, the cajas of Spain. And they are the ones who are having trouble, and they need to be recapitalized. They're going to have huge write-downs, etc., etc. But if you look at these banks in the Spanish index, they make out roughly 1.5% of the index. Write them off, and they will. It's like a normal movement in the market every morning. If you then continue looking at the Spanish stock market, you can see that it's very internationally exposed. It has a lot of exposure to other sectors, boring sectors like utilities. You have the largest water utility company, Iberdrola. You have great consumer discretionary company Inditex, etc., etc. Telefonica with a global telecommunication services network, etc., etc. And if you then can buy into the Spanish stock market with a dividend yield of more than 10%, of course there is the issue of the scrip dividends of some of those big names, but still you get 10% dividend yields. You can buy into a P ratio of around 8. If you look at the, say, Schiller P or Graham Dodd, you're even lower, and you are, according to our analysis, you're at 40-year low valuation levels. For instance, if you look at Schiller P earnings in these countries. So at the end of the day, the big question is, yes, there are troubles going on. We don't know exactly what's going to happen. We need to work with different scenarios. We need to make potential adjustments for write-downs of Spanish government debt, etc., etc. And then the big question is, after having taken all these potential negative scenarios into consideration, is this stock market still attractively priced? And the way we look upon it, that it looks like Spain has a huge discount, is trading at a huge discount to the world stock market. Probably, yes, there are some difficulties out there. It shouldn't be as high, so we need to take some part of the discount away, but still, it's a huge discount that we currently see, and the market has never been as cheap as it has. And Spain today is, as we like to look upon it, one of the most misunderstood stock markets, and we believe that it offers great value. And coming back to the theory, is coming back to the fact that the investors are making these collective mistakes short term because we are focusing on what FT is writing on the headline, saying we got to get out of Spain, etc., etc.